Wall Street, really? Some time ago, when we talked about P/E ratio, you told me that it can be used to judge whether a stock is overpriced or underpriced. But does a low P/E necessarily mean that a stock is underpriced and a high P/E mean that a stock is overpriced? Not really. Just knowing a stock's P/E ratio doesn't really help much. You cannot say that a stock with a P/E of 5 is inexpensive or a stock with a P/E of 50 is expensive. Well, how exactly can a P/E ratio be used then? A stock's P/E ratio should be compared with the P/E ratio of similar-sized companies from the same sector. If it's higher, the stock may be overpriced, and if it is lower, the stock might be underpriced. A stock's P/E ratio can also be compared with its own P/E ratio from the past to determine if it is overpriced or underpriced, based on whether it's going up or down over time. Should I use trailing P/E ratio or forward P/E ratio? Both trailing and forward P/E ratios can be used for your analysis. A forward P/E ratio may give a better idea about valuation because it takes the company's future into account. But it can also be inaccurate because the estimate of the company's future earnings per share, or EPS, could be incorrect. A trailing P/E ratio is completely accurate, but doesn't take the company's future into account. Whichever P/E you decide to use it consistently for all the companies during your analysis. Well, what are the factors that impact the stock's P/E ratio? What decides if it's high or low? There are many factors that influence a stock's P/E ratio. In a bull market, P/E ratios of most stocks are high. On the other hand, P/E ratios of most stocks are low in a bear market. One thing you should keep in mind is that companies that are expected to grow at a fast pace tend to have a higher P/E ratio compared to mature companies with stable growth, because people are willing to pay more for the future higher profit of such a company. Continuing with that logic, companies in growing sectors like technology usually have higher P/E ratios than companies in mature sectors like textile manufacturers. So, can I make a buy or sell decision for a stock based purely on my P/E ratio analysis? P/E ratio is only a starting point. You need to perform further analysis to determine why the P/E ratio of a stock is high or low. You would use other indicators like a company's growth rate, its dividend payment, the industry it operates in, etc. for this. This kind of analysis is called a fundamental analysis, but that's a topic for another time. Thank you very much for telling me about how I should use a P/E ratio for evaluating a stock, Wall Street, will it? You're welcome, Super Cooper. Remember, finance is your friend! Hey people, if you enjoyed this video or learned something new, please like, share, and subscribe for more easy piece of finance.